Hello and welcome back to the Art of Finance, and in today's video I'll be giving you an overview and breakdown of my investment portfolio for the year 2020. Currently you can see these are my investment holdings. I'm currently invested in the S&P 500 and the FTSE 100, which makes up a large majority of my investments. I'm currently invested on the platform Vanguard as my online brokerage. Vanguard is an excellent platform that charges very low fees and is very easy to use. They supply over large amounts of funds which are well diversified and specific for different regions. Vanguard UK is a good platform, but it definitely can be better if it allows you to purchase individual stocks like the US one, but that is currently not there. So therefore I'll use another platform, which is Trading 212, which I purchase individual stocks, for example my Coca-Cola share. I also have a holding in gold. It is a small portion of my investment portfolio, but you should definitely be invested in precious metals. Now, for the large majority of my investment holding, it is invested in either an index fund or an ETF. This is something that I highly recommend that people do, especially for beginners. Being invested in an ETF or an index fund allows you to be very diversified and invested in many different industries. If we take the S&P 500 and the FTSE 100, just there are 600 companies. The S&P 500 is the top 500 companies within the US, and the FTSE 100 is the top 100 companies within the UK. You'll have a piece in every single one of those companies, meaning that you have a slice of the pie for each company. This means that you are highly diversified and invested throughout many different industries. Whereas, if you invest in singular stocks, for example like Coke, you are invested in that specific industry only for that one company. So there's a big difference between the two. Now for beginners, I highly recommend that you first get started with an index fund or an ETF with the majority of your shareholdings in, as this is very easy to monitor and easy to follow. Not only that, you are also not being very emotional when it comes to hearing news. For example, X company has crashed, shares have dropped. That doesn't really affect you as you're diversified in so many different companies. The companies that do go down is made up from the companies that are doing well. So it just makes sense for a beginner to get started like that. This also allows you to get your feet wet. If you wanted to get started investing, then you can move on to individual stocks. But individual stocks can be also very risky. And as I say again, definitely be invested in an ETF or an index fund first, then you can start branching out to individual stocks. As you can see, I'm also have a portion invested into gold. I do personally prefer to buy physical gold, as I do have it in my hands and it's available for me when I travel. I could turn it into gold jewelry if I wanted to, and it's just something that I do have for investment purposes, and I can liquidate it wherever I need to go in no matter what country that I'm in. Gold and precious metals for that instance should be in your portfolio, but it should only be a small slice of the pie compared to the rest. This allows you to be a bit more diversified and has a bit more of a safety factor for your money being spread out in different industries. The more spread out you are, technically the better. There is a good argument for saying that do you keep all your eggs in one basket, or do you keep many little eggs all over in many different baskets? It could work in two ways. It's a very good thing, for example, if you put all your eggs in many different baskets, if some baskets do bad but some baskets do good, your profits will even out. But the downside is that if one company or one basket is doing really well, if you was invested in that company 100%, you will see a tenfold rather than a twofold increase of your shares in profit. So that is the big thing. Now the biggest thing when it comes to putting all your eggs in one basket is that it's very difficult to do, and it's very difficult to determine if that share or stock will go sky high. even the greatest investors themselves find this task very difficult. So for someone who's just getting invested, or even for an intermediate investor, it's very difficult to put all your eggs in one basket. But if you truly believe in it, research into these companies, and you feel like it's definitely a good company to invest in, then that's something up to you. But there's more of a risk factor and more of a loss that could happen if you are investing in it. From other channels, what I do see is a lot of people do actually purchase into a lot of small holdings from many different companies such as CocaCola, Disney, Tesla, but they seem to just be buying many small ones. The biggest investor, Warren Buffett, always said that you should always know what you're buying. Just because you like something doesn't mean you should buy it. For example, if we take Starbucks, let's say if I go to Starbucks every day and I purchase a coffee, that doesn't then mean that I should actually purchase shares in Starbucks, because you don't actually know what the reports actually look like. Once you actually dive into those reports, and you actually may have a look at it and say, actually wait, for the last 2 quarters they've been performing really badly, and there may be some clauses or unpaid debt within the company that might actually just hinder you not to invest in that company. So even though if you like a company, doesn't mean that you should invest in it. You should only be investing in companies that you understand fully, especially from individual stocks. I've invested in Coca-Cola, which is a good solid company. They've been paying dividends for X amount of time now. They've also increased their dividends over time. Great investors like Warren Buffett, who's also invested in it. But always make sure to do your research before picking individual stocks. You should only have about 5 individual stocks with your shareholdings in it, and the majority, large amount, should be in an index fund or an ETF, as it is very safe and you definitely can't go wrong. Now, if we move into my Vanguard account, I would like to show you an in-depth overview of how my account has been doing from April to December. There is an incline of my shares doing well. There have been dips, ups and downs, but overall I've got a 22.58% return, and I've made £1,012 in profit from investing £5,000. This is throughout the global pandemic also, and this is me being highly diversified in many different industries. So I didn't do a monthly investment until November, investing into the FTSE 100. So I have invested in that £300 for the month of November and December, as you'll see in the next slide. But this is something that I didn't need to worry about, and this is just something that you could just invest in and let it carry on, knowing that you are highly diversified and you are very safe when investing into these holdings. If we take a look at the breakdown, so you can exactly see how I performed each month, how the S&P 500 and the FTSE 100 together combined to see how much I made. There was only 3 months, which was July, September and October, that I've made losses in, but technically not a loss if you look at it as an overview. Those are the months that did a bit poorly. You could also see that I've also received some dividends as well, which is excellent. It's just basically free money from you being invested. The dividends that you don't see is from the FTSE 100, as that is automatically put back in and invested. But from starting off from 4,400, I've now been on an end balance of £6,012, giving me a total return of £1,012. Now, I literally did nothing for the first couple of months, and I've just decided to invest a bit of a bulk amount and then slightly top it up in November and December. I will be continuing that throughout the year of 2021. So this is just a breakdown just to show you guys what it actually feels like to have an account with Vanguard. You can see the fees that I've also been paying. So there's not a lot of fees. I might have paid maybe a few pounds here and there for the monthly running costs, but other than that, there's nothing really that I've been paying for. Really good low fees, and it's easy to invest. You could also set up a monthly investment, so you don't even have to think about it. Just automate the entire process for you, which I think is just brilliant. So you definitely can't go wrong. So this will give you that in-depth look of how you can see or track your progress throughout the months. And if you really wanted to get started, this is the video for you. Literally sign up to Vanguard, get invested in a highly diversified portfolio, but always do your research before investing. If we move on to my Coca-Cola stock, as you can see that I've invested over £2,300 and currently I am at nearly £180 profit. And from Coca-Cola, I wanted to do this slowly and I wanted to drip feed this account so I could build it up where I'll be gaining dividends. So I've received some dividends just recently for the month of December, which I've earned £14. The more you invest into it, the bigger the snowball gets, and that dividends will be coming in. The more you top up your account, the more shares you will gain, the more dividends you get, and it's just a recurring cycle where you're getting this free money, you're putting the free money back into your account, you're getting free money again on the next quarter whilst you're also investing. So you're earning off of the company that you're investing in. You don't even get this return from your bank, which is insane. So that's why I do recommend only investing in really, really good companies, and make sure you do your research. Once you're doing your research, only pick about maximum 5 individual stocks and just top them up or drip feed them as you go along. The great thing about drip feeding is that, as you can see throughout my Coca-Cola stock, I now have an average of £46.66, and I'm doing well. I've received dividends, there's been ups, I've seen it down in the negatives, but that's one of the things investing in strong stock. Even if it's doing bad, you're just picking up the cost at a cheaper price, so it's better for you. So you purchase more when it's lower, you purchase less when it's higher. Eventually it will all average out, but the main thing is that we are invested for the long run, for that dividends and that payout, and this is something that is not for the short term at all. The next time I'm looking to sell is at least 5 years plus, so this is just some of my surplus income that I'm investing, and I'm making my money work for me, and I've seen it work for me, as you guys can see yourself, that I've profited over nearly £1,200 from this, and I do believe that it's just going to carry on. There will be dips, there will be highs, there will be lows, but that naturally happens throughout the market. And for the year of 2021, let's hope we stay strong and we earn more. Thank you very much for watching. I do appreciate all the support throughout I think I started in July. I've now got 140 subscribers, which I did not expect to get or even hit. Thank you for people that were liking, commenting and subscribed to me. I do appreciate all the support. If we could carry on that support in 2020, that would also be brilliant. I hope you guys have a good New Year's. Thank you very much for clicking on this video, and good luck with your investing. Peace. This has been The Art of Finance.